Nykaa, that is one of the stocks that used to be the darling in the fintech space on the back of its profitability. And that has been lagging this year, even while its peers have bounced back from the lows. Now, why are the investors giving cold shoulder to this retail beauty platform major? Well, my colleague Somit is joining us to explain the details. Over to you, Somit.
Well, if you see the new age of fintech companies, all of them have bounced back from the 52-week lows, be it Policy Bazaar, Paytm, Zomato, Delivery or CarTrade. Now, they have bounced back in the range of around 12 to 59%. The highest bounce back we have seen is in Policy Bazaar, that is PB Fintech. But Nykaa is one stock that has been continuously lagging the street, hitting 52-week lows every day. Now, what are the investor concerns because of which we are seeing such kind of underperformance in Nykaa? Firstly is the fact that there has been a high employee churn. Nearly 5 senior executives exited the company in March 2023. Before that, the company secretary exited from the company. CFO and CTO also resigned in November 2022, while the private label CEO also resigned from the company in August 2022. So this is the number one concern. The second is the fourth quarter update was mixed kind of. Now, if you see, there was a healthy growth in the beauty segment. In fact, the fourth quarter beauty sales were at similar levels compared to the 9th month sales, but it is the fashion segment that has been ailing the stock price, because if you see, the fashion sales growth had moderated and investors are still not clear on the strategy of how Nykaa is planning to ramp up this segment going forward. Along with this, given the meteoric rise in Nykaa's financials, a lot of competitors have also taken interest in this segment, be it Myntra or Ajio, who have increased their assortment and advertisement spends. Reliance Retail has also entered the beauty segment by launching Tira. Tata Group through Tata Click is also eyeing this opportunity, while Shoppers Stop has also unveiled the launch of SS Beauty stores going forward. Now, the bonus issues saga that had happened earlier in 2022. Now, the share bonus was around the lockup expiry, and this has negatively surprised the investors given the timing, and this has consistently been an overhang on the share prices. Along with this, higher investments is also one concern, because if you see, with rising investments and retail, B2B and own brands, there are investor concerns on increasing capital intensity, because Nykaa needs to build more warehouses, increase their inventory levels, extend credit spends on retail stores. So this is one of the concerns ailing investors. Supply pressure is also one of the reasons why the share prices have been lagging, because if you see, there has been a non-stop supply in stock, which has also weighed on the share prices of the large pre-IPO shareholders. Nearly one third of them have fully exited the counter so far, but there are still many more investors who are invested in Nykaa, and investors are worried that they might also exit going forward. And also, there is a slowdown worry that has been ailing the share prices, because if you see, there are concerns on urban demand arising due to factors like high base and slowdown in the IT hiring that we have been seeing, and data is also suggesting that on a YY basis there has been some slowdown in app downloads, especially in Nykaa.